In this video, I'm going to discuss how to purchase insurance for first-time homebuyers, where to look, what to buy, and who to buy it from. I'm Jason Wamsgans with Partners Insurance. Let's get into it. Okay, so you're buying your first home and maybe you've started thinking about insurance. You talk to a few friends and everyone has an insurance person, right? But do you know how to pick one? Maybe you've searched on Google, you've seen tons of reviews and claims that they have the lowest prices, and all you have to do is take 1 minute and get an instant quote. How do you know where to start? So first, let's take a look at the three main channels in which you can purchase insurance: direct, captive, and independent agent. Okay, so direct. These insurance companies offer policies through call centers and bots. The selling point here is that they're cheap and easy. Okay, sometimes they're cheap, sometimes they're easy, but not very often are they quality. These companies are built on efficiencies, not insurance coverage, and not on customer experience. Next up are captive insurance companies. These ones employ agents whose job is to convince you that their insurance company is the greatest of all time, right? So they offer insurance from one company only. They spend $1 billion a year on pumping ads out to you. You guys have all seen these. These are companies like State Farm, Allstate, Farmers. It's likely to me that this channel will be gone in the next 10 years, but that's just my opinion. Then you have the independent insurance agency. This is an insurance agency owned independently from insurance companies. They have access to many insurance companies and offer comparisons for price and coverage so that you can make an informed decision. This is truly the best way to purchase your homeowner's insurance, as well as any other insurance like auto insurance, rental homes, life insurance, etc. Okay, now that we've established the three different channels in which you can purchase insurance, let's discuss what to look for in the actual quotes. First coverage up would be dwelling. So this is the obvious one, the amount of coverage to rebuild your home, the structure of your home. It's very important. The market value of your home is not the same as the rebuild cost. Okay, so market value simply represents what someone else is willing to pay for your home. A realtor is concerned with market value, whereas an insurance agent is concerned with rebuild cost. There are many reasons for the rebuild cost to be different than the market value. We have lots of clients where that happens. Sometimes there can be $100,000 or $200,000 gap there. Some of the reasons could be the building materials, such as solid brick, location, and many other factors. Another thing you want to look at in this coverage is that you have replacement cost. So there are two types of payouts. There's replacement cost and there's actual cash value. You want replacement cost. Actual cash value, they will depreciate as they pay out the claim. So in other words, you're probably going to be short if you choose actual cash value as your settlement clause. You'll save some money, but it's not worth it. Our minimum recommendation here is no lower than the amount calculated by the insurance company and or your agent. They're going to use a third-party system that's going to be used to calculate what that rebuild cost is for your home. You don't want to go any lower than that number, and in a lot of cases they won't allow you to go any lower than that number. Other structures. This covers other structures on your property not attached to your home. These can be things like fences, sheds, anything out back that's not attached to your home, like a gazebo, things like that. Usually this is going to be built into the policy, but if it's not, keep an eye out for it. It kind of depends on your situation and what you have detached from your home and its value, but our minimum recommendation here would be $10,000. Again, if you have a really nice fence or a very large shed that you've put on the property, consider going higher. Personal property. Most people are familiar with this one. This is all the property inside of your home that is not permanently affixed. These would be items like clothing, furniture, electronics. If you do have high value items, jewelry, arts, firearms, things like that, it's unlikely to be included in this blanket, and you'll need to speak with your agent about scheduling those onto your property in addition to personal property. Again, the same here as in the dwelling coverage, you want replacement cost. You don't want actual cash value as your settlement. Again, if you choose actual cash value, it will depreciate the value of those goods, and then you're not going to get the payout from your claim to be able to actually replace them. Our minimum recommendation for personal property would be 50 to 75% of the dwelling. So Quick math here, the dwelling is how much you're covering the home for. Let's say it's $300,000 in coverage. 50% of that would be $150,000 would be the absolute minimum you would want to cover your personal property for. Personal liability. This pays if you're legally liable for injuring someone or causing property damage. Common claims are dog bites and slips and falls. You have added exposure if you have things like swimming pools or trampolines. Our minimum recommendation here is $300,000, pretty standard in what's going to come on most policies. If someone offers you $100,000, don't take it. It's literally going to save you $5 or $10 a year, and you're going to give away 2/3 of your coverage. Sewer and water backup. This one gets people into trouble. This is an optional coverage, but you want to have it. It provides coverage when a loss occurs by water that backs up or overflows from a sewer, a drain, a sump pump, or any system used to remove subsurface water from the foundation area. If your basement is not finished or you don't have a basement at all, you still want to have this coverage, okay? I can tell you from experience, these claims happen often. Our minimum recommendation is $5,000. That highly depends on your situation, what you have in the basement, if it's finished, etc. Earthquake. If you purchase earthquake coverage, make sure it covers both your home and your contents or your personal property. The cost of earthquake insurance is highly dependent on where you live. How close you are to the fault line, how active that fault line is, are some of the criteria. Earthquake does have a separate deductible. So if you have a basic $1,500 deductible on your homeowners, it's not going to apply to earthquake. Earthquake will always have its own separate deductible. It's kind of funky how it's calculated. It is a percent of the dwelling. So if your home is covered for $300,000, your deductible is actually $45,000. Now, that may seem kind of crazy, but really earthquake coverage is designed to only kick in for catastrophic events. Our minimum recommendation here really is on a case-by-case basis. Flood. Flood coverage is not an option on homeowners policies. It's actually purchased as a separate policy, and unfortunately many people have learned this the hard way. Even if you're not in a floodplain, you may want to consider coverage based on your individual needs. If you're close to a neighborhood pond or a creek, it may be something you want to consider. If you are in a floodplain, it's a must-have. Plus, your mortgage company, if you have a loan on your home, is probably going to require it as a condition of your mortgage anyway. If you're not sure if your home is in a floodplain, I've included a link below to FEMA's website where you can just enter in your address and it will tell you if you're in a floodplain and what floodplain you are in. Okay, so those are the main things you want to look out for in your homeowner's insurance policy. If you really want to nerd out, I've included a link below that digs into some of the finer details if you're interested in that. Final thoughts. Insurance is a complex product with many options. We still like to think insurance is a people business. So look for an agency that aligns with your values and interests. Even if you get a quote online, call the agent and have a quick chat and get to know him or her. Do they sound like someone you want to do business with? Did you have a genuine conversation or did they just treat you like a number? This will give you a good idea of the type of service that you're going to receive going forward. Thanks guys, and if our content is providing value, please consider supporting our independent agency by getting a quote at partnersinsure.com. I'm Jason Wamsgans with Partners Insurance. Peace!